Ladies and gentlemen of the crypto space, we're live at 12:02 p.m. Thursday, April 1st. Today is a day of emotional control. Restraint. April Fool's Day. The markets are hot. The markets are decent. The markets are growing. A wide swath of assets are appreciating significantly. You're going to buy an asset, you're going to sell an asset, to jump into another asset, to buy another asset, to jump into another asset. Traders make money. Trading is also a high anxiety methodology to accumulate value. It will incur significant transaction fees if you're doing it on Ethereum. There's opportunity on Binance Smart Chain for significantly reduced transaction fees. And clearly on centralized exchanges, you could do trading. That's not a methodology I subscribe to personally. I think there's more value in prudence, in extending due diligence in transactions, and treating a portfolio as a bit of a artistic creation that has balance and flow and symmetry and components that have meaning and purpose. Today I'll discuss the balance of my portfolio, the logic that I employ, the structure that's achieved, and the massive restraint and emotional control that I extend to not purchase assets that I really would love to. They're exciting and they're potentially worth a fortune. But they don't fit into the story that I believe has the most value in the crypto space. Because of that, I'm able to muster the control, the self control, in order to achieve what I think will be the best possible outcome. Restraint is not easy. I'm not buying it. I'm not buying it, boys and girls. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges. Not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam! Let's pop it over to the main screen and see who's in the stream. Ooh, let's get this over here to the markets. Carlos is in the house. Always a pleasure. Finally made some Rook news. Rook is hot. There's so much potential with the asset. Love the platform, love the technology, MEV, value capture. That's awesome stuff. When their user interface gets redesigned, that's going to be beautiful. And that's what sways the market significantly. Something that's pretty. The market is very shallow. And literally, the announcement of news causes a 20% appreciation in the asset price. Now, clearly, there was some good functionality deployed. The soft cancel, pursuit of 1-inch exposure to that kind of liquidity. And they're tempted for Bancor liquidity. It's complicated with the BNT pairings on the pools and how that's crafted. But they'll end up evolving and iterating the platform. It's inevitable. So I very much have great appreciation for Rook. Rook is an asset I no longer have in my portfolio. And I had it significantly in my portfolio. I had a huge amount of Rook. Huge. I made a small fortune off Rook. And that's not a bad thing. I guess that would be considered a trade. But that is not the type of portfolio management I want to employ anymore. I don't want to buy an asset just to sell it, to capture value, to have to buy an asset, another asset. I don't want to get in and out of trades. I structure my portfolio so that I could walk away, that I don't have to babysit it for fear of depreciation. Now, honestly, my portfolio can experience significant depreciation, but the balance and the position sizes, I'm prepared for what I'm exposed to. And we'll go through that. So the market's pretty good. Bitcoin is hovering on, check this out. Bitcoin's hovering on this 3.24 or 3.32 support line, and this is M1 monetary supply of the United States dollar denominated. And this is the chart that I like to look at nowadays. RSI hasn't even budged above 70. So this hasn't even started yet. We haven't even breaking out from 2019 highs, yet alone late 2017, where this thing was produced a 20K previous all-time high. So it hasn't even started moving. So this is inflation. An asset is inflated when it outperforms another asset. So the inflation process for Bitcoin hasn't started. At some point, we'll see our blow off top, but when RSI is at 100, I mean, look, you had a double rip to almost 100 back in 2017. And, we could easily see this go up to 910, and that would make sense. And that's about 3x from here, 150K. And that's just from this kind of technical analysis. And I much more appreciate, Plan B's S2FX with regard to all-time high, 250K. And then, you factor in Willy Woo and the macroeconomic factors and the large money participants pushing this even much further higher for a blow-off top. Quarter mil, blow-off top, 350, 400. Maybe if it goes even higher. There's no way to speculate. There's no way to speculate. I mean, there's a way to speculate in having a position, but there's no way to speculate where the road ends and the market turns towards a depreciative cycle. What I know with most confidence is that we haven't started our appreciative cycle. If history has anything to say about it, all data indicates it's barely gotten started. And that's just not this technical presentation. Talking about all of the participants in the space. Raul, Willy Woo, Plan B. This is barely just getting beginning. I'm just saying. I'm just saying. John says, I wonder if Rook's ARB opportunities will increase or decrease over time. Well, we'll see. An ARB opportunity is an ARB opportunity. And frankly, if the bots are able to make a profit, that's when the limit order transactions get filled. I really like the new addition that Rook did with the instant fill concept. And that allows these smart contracts are facilitating the price point at which you're able to sell the desired asset at for the KeeperDAO sequence of smart contracts to actually execute the transaction so that the treasury is able to make a profit and pass those rewards, if any, on to you. The odds are the instant fill will not be passing on rewards to you. It'll just be the magic balance of the sale price, the limit price, such that the treasury can be compensated for gas, so on and so forth, which is fascinating. I love that tech. Love it. Love it. Love it. Love it. Wave says best place to put USDC right now under 10K Aave. Well, Aave is the most liquid of places to put it. It's relatively inexpensive to get in and out. I get in and out through 1inch. So if you go here and you go to USDC on the top and you go to AUSDC on the bottom, this is Aave. How about them apples? So you're able to use your chi. So I got plenty of chi that I keep on hand to facilitate relatively discounted transactions. Well, actually significantly discounted transactions. So this is putting your USDC in Aave, AUSDC, for the cost of chi. So you're saving 50 to 75% on gas. And then if you go to Aave, you'll actually see your position. Interesting, huh? Carlos, real friends send BNB to U.S. citizen friends. That's right, Carlos. Listen, that $2.50. Let ellipsis load. This ellipse. I got like $10 in BNB at this point, and I was able to access 1600 and change EPS staking at 2600%. I get something like 120 EPS a day. If that's $4 or $5 a pop, this thing's printing like $400 or $500 a day. That's crazy. So I thank you ever so much. There was no way for me to get BNB unless I went through REN. But it wouldn't be BNB. That would be giving me like Ren BTC, and I didn't have the BNB I needed to facilitate the gas of the transaction. So that BNB made all the difference because now I could sell ESP, get a couple $100 a day worth of BNB, but I'm just restaking it 2,600%. Of course, I'm going to compound it. This is the most compound crazy protocol because this is Curve. And I'm actually heavy on Curve, max bullish on Curve at the moment. So that is basically a core component of the portfolio as of right now. Took me an hour to figure out how to get one BNB using the Binance bridge to the code. Yo, Noah, any thoughts on options trading and how DeFi might disrupt the niche market? Well, you got Option and Hedgic and Siren, just as you're mentioning. Options are cool. It won't disrupt anything in legacy finance. There's barely options, but they're available and they're going to grow and they're going to be deployed in a decentralized fashion. Obviously, Oppian, Hedgic, I guess Siren as well, probably maybe as perpetual swaps, but they're options, and that'll give people additional tools and positions they could take to speculate on price action. Cool. Didn't know you can enter Aave that way. 1 inch. You're welcome, John. Yeah, it's cool because it saves a fortune using Chi. That Chi has saved me an absolute fortune. I think I have like 150K in transactions, Ethereum transactions, in the last year. It would have been literally like 400K if it wasn't for frankly I wouldn't have spent it. I would have had to be more restrain myself more before making transactions. But the discount with Chi is massive. Thoughts on Anchor Protocol fixed 20%? So not much interest for me. Um, I'm more interested in like Barnbridge, Bond. So I'm tempted here, but I'm showing Restraint, and I'm predominantly Curve. All my risk off, and including my Ethereum, is on Curve. But this thing's throwing out 162% on USDC, which is pretty cool. But Curve is just something I think is going to be a critical component of DeFi infrastructure. Forex of the DeFi space, almost in all regards. And obviously, Yearn is incredible derivatives, and YLA is just extraordinarily functional as well. I've put capital into YLA and I've taken capital out of YLA. I've staked YLA using CVP to boost, which produced a fair amount of CVP emissions that are vesting, and I don't plan to liquidate it. I have a decent CVP position, so that was I mentioned that I show restraint, but I was able to muster the conviction to think that CVP is a good position to have. It's not a large position. It's 0.1% of the portfolio, 0.05%, 0.5%. I don't know. It's tiny in the large portfolio scale, but it's there. So that's something I have. I don't think it's like if I put 0.1%, 0.5% into like Rook, I don't think I'm going to get the gains I want. Maybe I'll get 4, 5, 6, 7, 10x. But something that's that's why I don't even like to speculate. Because if you put 0.1% of your portfolio, you put like for me, if I put like $1,000 and I turn it into 10 grand, I don't know. It's not much bang for the buck. If I'm going to get a 10x, I kind of want to put 100 grand into it. But then I don't want to take the risk of the volatility of the asset. So I'd rather put the large chunks of money into something producing 50, 60, 70, 80% yield. And that's what Curve does. Curve just is spitting out capital. And the Curve asset is appreciating. So there's just so much incentive in the world to get the Curve emissions and to just lock it up as VE Curve. Because now you're getting more of the platform's transaction fees. And Curve emissions are only going to last so long. What, another 1, 2, however many years until emissions run dry? And who knows what they'll do with the tokenomics over the years? But something tells me that Curve is more of a macro asset in the crypto space. It's not a small scale speculative asset, and I think it has a solidified, very firm position with regard to functionality and what it provides to persons It literally facilitates monetary velocity. And that's really the core structure of the portfolio is monetary velocity. I want to participate in systems that facilitate transactions, lending, and borrowing. And insurance. Insurance is cool. Anyway, let's keep going. Let's see if there's any other comments. Cool. Didn't know you could do that on 1inch. My man. Thanks for the walkthrough. You're welcome, Heirloom. Much appreciated. Wave. Thoughts on Anchor Protocol? I mentioned. Neither did I, John. Yep. Alchemix, ALUSD, 70%. You could stake single assets or pair with 3-pool. Can you pair with 3-pool? No way. No way. You could pair with 3-pool? Where'd it go? Let's pull that up. Let's pull that up. Okay, no, that's the ALUS. Oh my heavenly Lord. You can get 80% on the ALUSD 3-pool, 3CRV. Wow. That's really cool. All right, well that's a consideration because ALUSD you're gonna is debt. Like literally you're locking up like 100K and you could borrow 50K and lock that. Yeah. Yeah, I mean it's dollars. What's pertinent, what comes to my mind is this is a dollar stablecoin pool pairing. And that's significant yield. So what you have there is a protected position producing significant yield actually. Is it auto compounding? Okay, you're getting 80% denominated in ALCX. So that's interesting. Now I like that because what you have is stable principal. Your principal is not going to be affected, or you're not taking risk on your principal, but you're getting an asymmetrically appreciating asset as emissions. And ALCX is worth was it $2,000? Heck of an asset. Low supply. I like these assets when they design them low supply, like urine. That's a low supply asset. Yeah, Link Pool's cool. Montana. I watch Chico Crypto. I like that. It's not for me, but that's the perfect title of this stream. It's something that you feel emotions about and you want to participate in, but does it fit the narrative of your portfolio? And for me, it does not. For me, it does not. Also, yield armor die. So armor's cool. Um, I like armor, and I have an insurance position, as you guys have seen on a couple of streams, which are then that insurance position is producing armor emissions, and that's cool. So if you could grow armor balance from your incentivized emissions, staking it with DAI, that establishes stability. It's a dollar stablecoin pairing against the volatile assets. You're going to have dollar stability on the pool position, producing a significant amount of yield. So I'm not doing it right now, particularly because I probably only have a couple hundred armor. Probably have about 1,000 armor. So maybe, but restraint. I just got the armor. I want the insurance policy. The armor emissions are just a bonus. Curve is a fundamental asset in DeFi. So many different projects plugging into it. Stablecoins appear to be proliferating. Well, they're dollars. And what I've realized is we basically have banking infrastructure, but I watch George Gammon a lot, and people may have seen my tweets between last night and today, and they'd be like, if they watch George Gammon also, they're like, this guy must watch George Gammon. So he gives such great examples and comprehensive presentation to how the banking system works to the best of his knowledge. And he draws on brilliant minds like Brent Johnson, Lynn Alden, so on and so forth, to accumulate the information that he presents. So I much appreciate that, and I consume it, and I think about it in the context of systems and the platforms that interest me, which is predominantly the DeFi space. So I've drawn some analogies and conclusions, and what we have is basically a fundamental banking system that has characteristics that are analogous and comparable to the legacy infrastructure. They're not even remotely, they're not the same because there's no Fed, but we have assets and liabilities, just like banking. Just, like gap accounting could be applied to crypto positions. And I find that fascinating. Why is Armor so much more expensive than Nexus? So Armor is a derivative of WNXM. Um, and you could stake NXM for yield. So ARNXM is capturing the NXM yield, and basically the Armor protocol bypasses the KYC requirement of Nexus Mutual. Armor is an insurance brokerage, so you could get insurance from Allstate, but you have to go through a broker, and so getting insurance from Nexus Mutual directly doesn't really exist in the legacy systems. Um, they uh, Insurance is delivered vis-a-vis brokers, so Armor's great. I think that type of middle component to a platform distribution system is a necessity, and it's part of the evolution of the crypto space. So Armor provides significant value on top of Nexus Mutual. Armor's presentation, drawing from ZapperFi to analyze your positions and provide you insurance policies that are backed by Nexus Mutual. That's cool. So that's actually something I had up here I was going to mention. So the Armor splash screen is really cool. So the smart cover platform analyzes your portfolio and it'll give you your insurance cover options. And the Git book, you should read it. It tells you a lot of details and things that actually I was asking about. So this is actually quite useful to better understand how the platform works. And it's just it's if you haven't looked into Armor, it's worth spending time. It's a very useful protocol. It's a critical part of a functional financial system. Armor doesn't appear to have an option to partially cover your exposure. Yeah, well, you could go here. And you can also buy your AR NFTs directly, but the smart cover system is nice and convenient. Oh, let me skip this. So if you go down to the bottom, or when stuff here, like when stuff comes up here, you could I thought you could manually set the value, add manually, so you could choose here, look, curve, and you could choose 400th or whatever you want. You can manually set stuff that you want. Anyway, whatever. So that's the whole point. Oop, pardon the zoom. So I already have it. That's probably why it's not working from a UI perspective. But that's the point. So it does not correctly calculate in some regards. So I don't have this much. I have less than that. So it's not this their analysis actually shows that I have more than that. So I have less than that value. Probably by like 20-30%. So I this is actually a little oh, add manually. What does that mean? I would like to adjust that so I could get more days out of my insurance policy, albeit by staking or providing the value, which provides me the insurance. I'm also getting the Armor reward, so I don't mind that it's overinsured. It's not a bad thing to overinsure your capital. Anyway, so portfolio structure and not buying the things you want to buy. So let's talk about my portfolio structure. And maybe that'll give you guys some hints or insights into obviously the way I structure things, but give you some experience to draw on so you could structure things differently and how you think about how you size your position, so on and so forth. So I'm currently sitting on 25% Bitcoin. A little bit more than in cash, probably about 28%, 30% cash, which is USDC, and that's all in Curve and Bancor. Decent Bancor position. I have some cash here, 30K in USDC, 46 in DAI, and the emissions have accumulated significantly, so that's nice. I don't. So this is I don't see any reason to liquidate Bancor. I think there's great potential for the platform as a systemic component. Hayden from Uniswap, man, he does not have a fond opinion of their monetary policy implementation or their pool structure being all paired with BNT. But I see great merit and meaningfulness and logic in the implementation. And I have much appreciation for it. Enough so to have a position. I actually have a position in Curve and Bancor, but I have nothing in Uniswap. And that's another asset I tempted to tempted to have. I don't really FOMO. I'm not fearing of missing out. Like Rook probably was in the lower 200s and it popped the four. Good for folks that had conviction. A lot of those folks probably bought at 800. I know I sold at 800, sold at 6, 7, and 8 after buying at 65. That was probably one of the best trades, so to speak, I've ever done. Um, I really want to own the asset, but I want to protect my value and focus on the structured portfolio that I feel best expresses my sentiment of the market, which is basically I don't trust shit. Interestingly enough, so 25% Bitcoin, 28% USDC. Ren is a very large component of my portfolio, but it's not because I want it to be. It's because it has to be. There's no other option. Ren was a fraction of a fraction of a. Ren was when I first took my Ren position, it was 12% of my original capital that I applied to the crypto space. As of right now, interestingly enough, Ren is actually still about there. It's about 15% of the portfolio. Interesting, but it's actually the third largest position I have. I guess I can't. I wouldn't want to liquidate the dark nodes even if I couldn't. So Ethereum is fourth on the list. Actually, folks have heard me talk recently, or last 10 or so streams, that I didn't have an Ethereum position. But if you look at the chart, Ethereum broke out and is now currently in somewhat of still a symmetric triangle. But I would argue this is more of an ascending triangle at this point, and because bam, it smacked into the previous high resistance. You could argue in some regards this has hints of an inverse head and shoulders, a dip, but it's not very. The shoulders are not pronounced at all, or maybe these are the shoulders. Maybe those are your shoulders. But in any case, you're sitting on resistance, and it's sticking at resistance. It's like you're stuck to the ceiling. So there's much potential here for bullish price action. So Ethereum is for much less of the portfolio than Ren. It's 9% of the portfolio. Curve is about 8% of the portfolio. And Cosmos is half of that, is about 4%. Then I have that DAI position from Bancor. This is it's about 2% of the portfolio, and Bancor is probably about 3% of the portfolio. Polkadot's 3%. Synthetics is 1.5%. Band protocol is 0.75%, and then it just goes down from there. Then it's Aave, CVP, Alpha Finance, Cresco Fin, WCRES, WCRES. That's as tiny as 0.2, 0.1% of the portfolio. Tidal, I took a position in. My man Lewis put me on the Tidal. Tidal is an insurance platform for Polkadot, or on Polkadot, that in theory could provide insurance for other chains as well. And that's about it. Then I have my old school assets. But there you can see those that's my large assets, and then we work their way down to the smaller assets. Now, clearly I could sell stables and buy Rook, Digibyte, Elrond. It would even want to like a position in Cardano. But I don't want the volatility. I don't need it. I have enough volatility with the assets that I have exposure to, and I happen to have conviction in the assets. For instance, the large assets I have exposure to. Talking Ren. Rent's a money machine. It literally prints Bitcoin. That's so cool. And Ethereum is going to be deflationary, ultrasound money, as they talk about it. And I agree with that analysis. Um, and that's why it has to be that size. And the dollars, 28% of the portfolio are producing more curve. It's literally just curve emissions, which is an asymmetrically appreciating asset. So there's risk in holding what I'm holding, but frankly, it goes up over time, and it should, because people are so ferociously encouraged to lock to VE curve, because in 5 years, the platform's going to be doing $50 billion a day in transactions, and VE curve holders are going to get a huge amount of transaction fees on a weekly basis. I mean, as it is, if I go here, as it is, I think I'm getting like $200-300 a week. I'm up. There you go, up to almost $2,000 in earnings. It's not the largest percent, but that changes if Curve goes 10x, 50x in their daily volume, which is something that's what I speculate on. Folks are speculating if an asset appreciates or not, but I'm more interested in speculating if the monetary velocity in the crypto space actually goes up significantly, because of the lucrative opportunities and the monetary policies that have been executed and empirically proven at this point, to have net deflationary pressures when using inflation to incentivize participation. That really changes everything. Um, Rent to 10, RF, that's right. Why would he want to use the 3 pool over the ALUSD pool? Because of the curve emissions. The ALUSD 3 curve will give you ALCX emissions, which is interesting, because the Alchemix platform is powerful, and there's great deal of logic to suggest that the ALCX asset will keep maturing. There'll be better tokenomics, modifications and enhancements to monetary policy, and that the speculative bet is there. So what's nice is that it's dollars, so you're taking little to no risk in your principal, and the principal is emitting volatile asset, asymmetrically appreciating assets as emissions, and that's cool. And that's exactly why I pulled out of Yearn. That's why I dropped my YLA position, because the YLA is basically auto compounding Yearn. And the YLA I put in for staking using CVP in the Power Index portal, which is producing like over 100% yield. But I had enough of a CVP position that I wanted, and I was basically able to stake to get there and retain a fair amount of CVP that I purchased to get the boost. And it appreciated. I think it appreciated, good 15-20% over the time that I held it. I didn't, I didn't liquidate all of it. I retained, as I mentioned, like 0.2, 0.3% of the portfolio in that position. So I'm bullish on that asset. I'm bullish on every asset. These assets are crazy. You kidding me? You're telling me you think Rook is not going to go up in value in the next 2 years? I mean, every asset in this space is going to inflate. It's all going to inflate. It's not what's going to go up in value, it's what's going to go up in value more. I'm telling you that. So that's why I tell you, instead of focusing on trying to capture as much value as I can, focus your mental effort on something that's bigger and more grandiose, and not trying to make as much money, but you need to be sustainable. To be sustainable and to produce sustainable gains, you need to focus on portfolio structure and how to manage money. Because if you happen to make $1, 2, $3 million, you better figure out, one, how to protect it, two, how to make money using it, and three, how to grow the principal without jeopardizing your net capital. You need to know how to manage money. So if you get lucky enough to make money, you got to know how to manage the damn money. John, you're very welcome. It's much appreciated. You guys as well. Thank you all for listening to me. I hope it helps. James, time equals speculation. Time is a component of speculation, and it's very hard to have strong hands over periods of time. Carlos, Alchemist wants to deprecate AOUSD only pool to keep 3 pool since it has more utility. Yeah, so the AOUSD 3 pool has uh, an absolute it's incredibly needed because that creates the liquidity, dollar liquidity. You can literally get in and out of USDC, DAI, USDT, and AOUSD. That's the whole point of the pool. That creates liquidity, and liquidity facilitates monetary velocity. You need the liquidity. And look what happens in the legacy financial system every time we have a damn liquidity event. Basically, the system falls apart. Why are projects choosing to airdrop V-Curve token holders? Because it's an integral part of the crypto space, of the DeFi space. And interestingly enough, V-Curve holders mostly lock for like 3 to 4 years. So airdropping to V-Curve holders, you have probably some of the strongest handed persons in the crypto space that don't dump. We lock because we see the future of the platform, which is exactly what happened with Ellipsis. Ellipsis gave me like 2,900 tokens. And at launch, after the airdrop, they were $22 a piece. They literally airdropped me over $50,000. So I didn't claim, which is actually good because otherwise I would have owed capital gains tax on at the time of claim. So I claimed when Ellipsis was about $2.20. And obviously, you get the 50% haircut. So it's probably like 1,200. So I claimed when it was, I got 1,200. So I claimed probably about $3,000 worth of capital gains. And, 33% of that, I probably owe about 800 to $1,000. Excuse me. Probably owe about 800 to $1,000 on capital gains tax for that airdrop, which I pay. But now it's going up. Ellipsis $4, $5. Does it go higher? Does it go lower? Whatever. Speculative bet on the future. If Binance Smart Chain is going to be anything, it's going to need 4x functionality. And what better place to get 4x functionality but the damn Curve smart contracts? So hopefully they're decent developers, meaning clearly they put in some modified monetary policy, but at least hopefully they're decent developers with regard to process and forking patterns. Like they should be able to merge from upstream seamlessly, and if they structure their code optimally, that upstream that merge from upstream, or rather a merge to downstream, should be seamless and painless if they structure the code optimally. That's why macro mine Harris. What did you say? Alchemix one. Yeah, that's right. Yeah. So there's no reason you shouldn't look at Alchemix. I feel very comfortable advocating stablecoin positions. So Alchemix is great. Um, uh, it's a self-paying loan. You're able to borrow ALUSD. You're able to convert it to DAI USDC, whatever you want. It's a self-paying loan. Give that some thought. ARF, I feel Keeper is undervalued, also performing automated tasks. Yeah, Keeper's big, and that's Andre's platform, and so on and so forth. And those boys at Yearn. So yeah, uh, you and only you could determine if you want to speculate on volatile assets. So I mentioned my volatile assets. I have a BlockNet service node, a StakeNet service node, a Firo service node from years ago. So there's a couple of other assets. I have Iris, Kava, Band. So I have Cosmos Hub assets. I have Polkadot. I have Plasm, which was a lock drop last year. A lot of Plasm. But I have my speculation, which gives me all the more reason to want to have a very large dollar denominated position in the portfolio, about 28%, as I mentioned. Don't forget about ICE airdrop from running a dark node. Yeah, I know nothing about that, but I should probably know something about that. Am I going to really just Google ICE airdrop? So pathetic of me. Yeah, that's not helping. What the heck is ICE? Let's take a look real quick. I literally know nothing of it. What, Popsicle Finance? No way. X Dirty D, no way, Popsicle Finance. I can't stand corny. Too much gamification drives me nuts. Cross chain. They had to call it popsicle finance. Pancake swap. Crazy shit. All right. I'll take a look. I'm not gonna. Oh, it's BSC. That explains it. Everything on BSC is named after a food group or something stupid. But now that I got a couple of dollars in BNB, I'm good to go on Binance Smart Chain. I like it. Oh, it's already in the BSC wallet. I just have to add the ticker, the address, and the index and the decimal. Cool. All right. Thanks, X30D. I really appreciate it. All right, boys and girls, that's enough for today. Be careful. Be risk considerate. And focus on portfolio structure more than what you're buying. And does something that you want to buy fit into the structure of your portfolio? And really reflect on your goals. Your goals aren't necessarily to make as much money as possible. Doing so is usually, more often than not, results in the adverse effect. And end up taking on too much risk and you end up losing value. So a big part of the portfolio really needs to be protecting value and growing and accumulating value. So what better way to grow and accumulate value than to deploy cash and have the emissions of that cash be an asymmetrically appreciating asset like Curve or ALCX? Or, it's not that lucrative at this point, but it will be in the future. 100,000 Ren for a Ren Darknet, which gives you literally Bitcoin every month. Pure, solid gold Bitcoin. Stake it, Noah. The yields are good. And yeah, I'm not staking. I don't have any assets on Binance Smart Chain. I just have EPS. And there's no way for U.S. citizens to get any value onto Binance. And I don't have any liquid capital. All my capital is deployed in a very consistent, or a way that's very consistent with my portfolio balance methodology. Heirloom, my man. Okay, 12:44 p.m. on Thursday, April 1st. This is not an April Fool's Day presentation. This is real deal logic. We don't mess around here, boys and girls. We make good decisions. We consider risk. And my goal is to just help you guys as best as I can. So I thank you all for joining me. We got 29 people on the stream, 11 likes. We can do better. Tell everyone to subscribe, and I will see you again tomorrow. Peace.